We're never going to be the company that says, stop drinking your coffee so you have a better retirement. It's about giving you the data and the information you need to make educated decisions.
Today I'm joined by Eleanor Hasler, who is VP of Product Strategy and External Relations here at Dozens. How are you today? You okay?
I'm good. How are you?
Very good, thank you. Thanks very much for coming on. We're going to chat about a few things today, a few more just sort of general questions, and then before diving into a bit more detail as to how the product works.
Cool.
So could you give us, first of all, a rundown of the product, how it works?
Dozens was essentially born out of a need to align business interests with the customer's financial well-being. The way that's now come to fruition is that we offer a current account, budgeting and saving tools, and an investment manager all in one app. And we look to take our customers on a journey from being a spender to a saver to an investor. So we're not a marketplace, we want to be an ecosystem, and we want to help people no matter where they are in that journey. So whether you're someone who's just trying to get out of overdraft and put your first savings aside, or you're someone who's looking to get access to better investment products in the same place, we can offer all of that. And I guess importantly, we monetize when you spend, save, invest, not when you borrow, which means that we can sort of look you in the eye and honestly say, we need you to budget and we need you to save, because otherwise you're not doing well and we're not doing well.
For sure. That seems like a very sort of direct and kind of thought out direction that you were going in. How did that come about? Was that the founder who came up with this mantra, sort of like the 3 stages? Has that always been at the heart of the business? The
mantra is in focusing on savings and investments definitely comes from our founder. Aritra previously spent 13 years at HSBC across, I think, every single department of the bank. And he realized that as long as the bank makes money when you're borrowing, there's just not a lot of incentive to get them to build good products, to get people to save, which is what we want consumers to do. And so I think the vision has always been there and will always be there, which makes our job a lot easier because we're sort of working in a very clear direction. The spender, saver, investor journey and how the app looks today, which is sort of structured around that. The sections are spend, track, grow, invest, and then Dozens Home. Have all come through sort of our, obviously, sort of desk research and our own conversations. Conversations in our own team. We're not a normal team. Over 50% of us don't come from financial services. So we can sort of test ideas amongst ourselves first. And then working with a community of 300 people to build the app. So that was a long and iterative process of sort of trying to figure out how you can get someone's entire financial life into one app.
Can you tell me a little bit about what the name of the company means, if anything?
Yeah, sure. Well, maybe let's start with the Dozens name. There's a post-rationalization, and then there's the real story, which is Dozens came from a random word generator. It's really hard getting a one-word.com, and we wanted a word that is an actual word, not a made-up word. And then obviously it works really well because we are about sort of working for everyone, and then that's where We Are Dozens came from. Project Imagine is the mother brand. So Dozens is basically the first consumer brand of Project Imagine. Project Imagine owns the people, the tech, and the licenses, which I guess right now, because Dozens is the only brand, is a bit weird. But in the future means that Project Imagine can go and use the same stack to either build new consumer propositions, for example, for more experienced investors, or it means that we can also look at potentially moving to B2B in other markets.
For sure.
The idea is that Project Imagine, one day, the very big vision is that it becomes almost like a university where people come to with innovation ideas for financial products, maybe like Google does that for tech today. Today I manage product strategy and external relations. That means I split my time between looking at what we're going to build next, so I'm not as hands-on involved in the day-to-day build as I used to be a year ago. And then external relations, which means talking to investors. We just launched our Series A, and then doing fun stuff like this. I joined in March last year when we had lots of ideas and a few drawings, so it's been really fun to sort of go through that entire process. I started off in digital product, working really closely with our founder, Aritra, who's got a product background as well, in sort of figuring out what the first version was going to look like.
How many people were there when you started?
That's a good question. Maybe 14 or so.
14, yeah.
And we're now 35 in London and another 35 in the Ukraine.
Okay.
So yeah, it's definitely a different company now.
Yeah.
My background's in digital products, so the last thing I did was build basically sort of a three-sided property tech marketplace from scratch, which is also really good fun.
Talk a little bit about sort of the ability to grow savings, but can you tell us maybe from what you know or what your experience is, how has that traditionally happened for the user?
Sure.
So in terms of them building their savings and how does sort of Dozens help to change that in a different way?
Yeah. So I think one important thing to put out there is that most households in the UK spend more than they earn, so most people don't save in the first place.
Yeah.
And then from the conversations we've had over the past year and from chatting to our community over the course of 6 months last year as well, is that what most people do is they put a fixed amount away into a savings account and then they check their balance. There's a stat from Aritra's previous time at HSBC that the average time people check their balance is twice a day. You and I probably don't check our balance twice a day, so that means that there's some people who must be checking it 15 times a day, so every time they make a purchase, they go and check their balance. And that can't be the way. And so we were looking into how can we move away from people just looking at what they've done in the past to sort of figuring out how they can sort of project what they need to do today so that the future looks different and better. Yeah. And so we wanted to bring the savings account and the current account together in one place so that money can flow easily, and it's a very simple journey. We've also found that people would rather go, or will often go into overdraft while they have money in their savings account. So they'll pay the bank for punishing themselves that they've gone into overdraft, which is also pretty nuts. And so we were just looking to see of how can we, again, work with our community to figure out a product where, for example, with our budgeter, which I think we'll go through in a bit, we can tell you what you can spend today so that you sort of stay on track for the week and the month. Yeah. But also always in a sense that we want to give you the tools to be able to do that. We're never going to be the company that says, stop drinking your coffee so you have a better retirement. It's about giving you the data and the information you need to make educated decisions.
What is the makeup of the typical Dozens user, and what is the sort of makeup of the community? I guess they're two separate entities, but one may inform the other.
Yeah.
This current stage in your growth.
So there's, it's really broad in both the community and now our user base. What's really nice is that we see in our user base now a lot of similarities with that original community. So the community was people, obviously as of the age of 18, they're all grown-ups, but besides that, there's not much that connects them. So again, it's everything from a student who's in overdraft trying to get out of that, to an investor in their 50s who's frustrated because they can't move 50 grand from one account to another within a matter of seconds. And so it was really interesting during the community build to see all those people interact on a platform and sort of talking about their financial needs, and obviously also seeing themselves how different financial needs are. Yeah. And we found that actually income and age aren't necessarily the best indicators of your financial needs, because you may have a high income but you may be terrible at spending and end up being in overdraft every day anyway, or you may have a low income but maybe you have some inheritance, or you're just really good at budgeting. So it's much more about sort of figuring out where people are in their life. We see the customer base break down into why they come to us into sort of two core segments that we define as the spender to saver and the saver to investor. So on the one hand, we have people coming to us to use our budgeting tools and our saving rules who get excited about if this and that, who get excited about the analytics that we offer them, and then obviously the standard stuff of sort of being able to use the card for free abroad and so on. Yeah. And then on the other side, people come to us for our bonds and for our investment products, and I guess having that together with the current account as well. We've been really surprised and really happy to see that that it is as broad as we wanted it to be. So we've actually got 60% of our users now are outside of London. We've already got over 35% women, which are in another company. This is UK, yeah. And so I guess, again, the one thing that brings all of these people together is that they've made a conscious decision that they want to do better with their money. If someone is happy to be in overdraft, then we're not the sort of solution for them.
Okay. And how do you find people are actually finding you guys? So like in terms of you've said there that there was a very sort of set and determined delivery of people going towards companies like Starling and Revolut because they would often hear, say, word of mouth within the metropolitan sort of circle, and then being able to sort of use those products and the network effect, that kind of thing. Yeah. Whilst what it seems like you're saying is that that's not necessarily the thing which is driving your early stage growth.
What I've been surprised about is just how many people come to us because of our vision and because of what we focus on as a business. I thought people will come to us because because of the budgeter or the bonds or something else. Which means that people come to us with really high conviction. We've also, Eritrea spends a lot of time on communicating with the community directly, so do the rest of us. We try and do a lot of offline events. We just did a deal with, or a partnership with Westminster Council, where we're doing a pop-up on Harrow Road, sort of having people come in on a daily basis talking to us about their financial needs, which is awesome. So yeah, I think people are really bought into this idea of, we understand how you make money from day one, and we can see that that's aligned with what we need. And I think that, that's a big thing for many people. On the flip side, because we're going after that segment that doesn't yet have Starling, Monzo and other things, or even doesn't have a lot of apps, obviously there is sometimes that friction of, oh, why isn't this working 100% yet? And that's an ongoing dialogue where our service team invests a lot of time in talking to people to, have them understand that, we are still early stage. We've been live for 6 months. It is a work in progress, and so. Yeah, it's an interesting ongoing conversation.
For sure. So what happens when you discover this segment of users? What you said 60% from outside of that sort of core area that we're talking. What happens then from your perspective? So you find out that your users are not necessarily from the cohort that you expected them from. Does that make you change anything about the way that you deliver a service, the way that you speak to your users and so on?
In terms of how we speak to our users, that's something that, again, is very closely tied to our vision and sort of how we want to be recognized in the space and where we want to go as a business. So I don't think that will ever change. I think the difference is that we are now investing more time into going to those people. We just had our first community event in Manchester, and we're doing this project called the Great People's Money Survey, where we go around the country and we go to, random cafes and pubs in Swindon and across the country to get more insights from those people, because I think as much as we're a diverse team, again, a lot of us are not financial services, we are still all people who work in London for a fintech startup, so we're not normal by any means. So I think just investing more time in continuously understanding those people is the only thing that changes. The tone stays the same. For us, what we need from our customers is trust, and that's really hard to gain because we're not asking you to download another pizza delivery app. We're asking you for your money. And so for us, it's about finding people who come to us because they trust us, not because they want to test out one more fintech or because they want to use some more venture capital funded new feature that gets you to a certain number of users. From day one, we've been talking about getting customers, not getting users. So for us, getting 100,000 users in the first quarter would have been pointless if we don't then also see those users turn into customers, which for us means they have balances in their current account and their cash savings, and they're using our investment products. Because we want to enter into a long-term relationship with our customers, and we're not interested in just becoming sort of another tool. We want to become people's primary bank at some point when we become a bank, if we become a bank.
For sure. Okay. Have you learned anything over the past year about leveraging trust? Because that seems like one of the biggest challenges of any product in this space.
Yeah, I mean, it's huge. I think there's sort of two sides to it. One is what I've already spoken about a lot about the community and creating offline relationships. We're actually seeing on our customer map of our first 10,000 customers, we're seeing sort of hubs around where our community has been before we launched. And so we know that that networking effect works. And we know that whenever Eritrea gets on the phone and calls an upset customer directly, that will have a humongous networking effect and build trust. So that case of sort of extreme transparency that a lot of our competitors have been driving as well, which is really cool and really new to the industry.
For sure.
And then there's also just I think being honest with expectations. Like, we didn't launch in January and say give us your salary. So I think a lot of it is just time and proving ourselves, and that we're not crooks, and we're not here to benefit from you. Again, the whole point why we built this business model is because we want to benefit together, and sort of grow together, we as a business and our consumers as their savings and investments.
What does your space look like from a competition perspective?
Where we see the competition is sort of across our different sections of the app. There's sort of competition for each one of those. I don't think we've seen a challenger who's got the same setup of sort of that whole journey that we offer. I think where we where we want to differentiate is obviously aggregating all of that into one place, and having that as a journey as well. So we never want to be in a position where we're an intermediary, where you're paying us for convenience. So we're either going to offer you our own financial products, or if we offer you other financial products, so for example in our investments we offer you ETFs from other providers, from BlackRock and Vanguard and Co. But the journey that you go through to get to that, and also the pricing model, we actually only charge you when the value of your investment goes up, is our product. And if you have an issue with the product, you come to us. You don't have to go and deal with a third party, which again really helps us with that trust building aspect.
The product teams as well, to achieve this sort of three-pronged approach, as you were mentioning, current accounts, investments, that kind of thing.
Yeah.
You will have different verticals dealing with different things, right?
Yeah. We, in terms of the product team, that hasn't been split out yet. The way we've split the product team today is we have product strategy, which is the team I'm working on, and then we have product delivery. So we have Kat, who's brilliant at just delivering everything from our internal admin panel to all of the external product. As we grow, that's not going to be sustainable, and we will have people who are responsible for those individual verticals or products specifically. But I think for now, we're all sort of still in that really happy place where it's nice to have everything together, because that means that everyone's constantly thinking about the entire journey, and we don't get into that place where everyone's got their own sort of their own targets and they're forgetting about the bigger picture. And I think that's where banks have a huge issue, because each product team just focuses on their targets, as you would. We're rational humans, right? So we think a lot about how can we maintain the incentive structure to make sure that we're all thinking about the big picture and the good for the customer, and don't sort of get stuck in our own little targets.
You're currently, you said, sort of 6 months launch, is that correct?
So we launched it's July now, we launched in January, mid-January.
And you're just in the Series A, right?
Yeah.
So what's next? What are you hoping for in the next stage of your sort of product life cycle?
Sure. So obviously the main focus is growth now. I think we're at a point where from the feedback that we're getting from customers, obviously we're constantly iterating. We're about to launch a bit of a redesign of a couple of sections of the app. But growth is the main focus, and then on the other side, we're looking to add to the product. Again, we want to become the home for your money. So that's on the one hand, sort of adding, what can we do to give you more options for your savings and investment products. Then there is we're currently looking into business banking, which is interesting because then we have the ecosystem and the two sides of the platform. We already have the licenses to create investment products. So that could become really interesting, where we can offer a better service to small businesses in the UK. We can then offer their loans as a product on our Invest shelf for our consumers, and that's where sort of that circle really starts working. We're also looking at different markets at the moment. We are evaluating whether the States or Canada or somewhere else makes sense for us. So we're it can still go in many different directions, but I think we're in a place now where we feel quite confident that the core product works, and we're getting the feedback that we wanted to get, and we feel comfortable that we can now scale that up.
Cool. So this kicks off sort of with a grow area of the tab, and then from there we have this sort of linked to IFTTT network, and then we will use those to set up sort of specific features that are relevant to their user and their environment. You've built that straight bang into the kind of core of the Dozens app. Any particular struggles with getting those things linked up?
No, If This and That is a US tech startup. So with all the partners we've dealt with, they've been a pleasure to work with. Whenever we're working with other startups that are also growing, that have a tech background, it's usually very simple. There's an API and you can switch it on. So that's been great. Yeah,
real simple. What sort of core user problem were you hoping to solve by getting these sort of savings rules and this integration with IFTTT's kind of setup?
Sure. So the integration with IFTTT is obviously just a quicker route to market. They have integrations with many more apps than we could get integrations with from a tech perspective, but also then from the partnership perspective. So it's just an easy way to go. It's also been done before, so there's some kind of validation that users aren't too scared to go for that. The reason why we want to have saving rules that aren't just roundups and sort of monthly regular savings is that we talk a lot about money through the eyes of life and how we can get this abstract concept of money, feeling a little bit more closer to what you're doing every day, and getting it into a place where you can talk about it with your mates. I think that's sort of the end goal, where you can have a conversation at the pub about the fact that you're saving every time it rains, or you're saving every time your football team scores, which is, people don't usually talk about savings. It's, as you said earlier, it's something that's so private, but it's not, it's not a conversation you have at the pub. And so that's where we'd like to get to, where people have fun with their savings and they're happy to talk about it. But the other benefit that we've actually seen now that we've been live for a few months is that because it's automated and because something like every time it rains isn't as I guess is an active thought as, okay, I've got 200 quid going into savings once a month. We see that people save without knowing that they save. And so we've had, the first people come back to us and go, because they only check balance, as they always did, but they don't then go and check the balance on their cash savings, they've sort of, saved 100, 200 pounds for the first time in their life because that's just gone out automatically. And I think those are the experiences that we sort of live for and that we aim for. So we've been really, really happy with it. Also because, again, it's a feature that I thought would resonate a lot with London and Shoreditch specifically. And actually, Kat, who heads up our product delivery, I think her mum got her entire golf club signed up with the IFTTT rules. So we're sort of seeing different demographics getting really excited about it, which is really nice.
One thing I did notice when I was seeing there is you've also got some dozens rules or some very similar. What's the idea? What's the thinking behind that? What will that be, if not similar to the IFTTT integration?
Hearing about an app that integrates with other apps, that integrates with your banking app, is something that's pretty scary to most people. When we go out and we chat to people outside of the M25, a lot of people are still worried about contactless payments, let alone if this and that. So that's just to make sure that we are offering something that works for every one of a single one of our customers. We don't think we need an IFTTT integration just to give you roundups or to allow you to regularly save every month. So it's about making sure we're catering to everyone. But I love what you said about behavioral economics. Is obviously something that we've thought about a lot. The idea for IFTTT came from, I don't know if you know Capital in the States. They're awesome, and they work with a guy called Dan Ariely, who's also the Chief Behavioral Officer for Lemonade.
Yes, of course. He's a behavioral economist. Par excellence, isn't he? I remember they made a big hire of him, didn't they? That was quite a big deal.
And so it's amazing when you hear his talks about how you can incentivize people to behave better, whether that's in money or in eating healthier food or something else. So that's been I think one of the most fun parts of designing the product and thinking about the journey of how can we help people help themselves with sort of making these smarter decisions with sort of those really small triggers.
Okay. So there is a sort of a bonds area, and I noticed that was directly below the savings sort of modal. So what does that? How does that work? Is that working in conjunction with that? Do you have anything there to link the three up? We've got like a projection graph of the way that like your savings will go up alongside your kind of contributions. Is there plans to link up more in the future?
Absolutely. So as soon as you have a significant amount of interest coming back from the bonds, that will sort of feature in the graph as well. The bonds are essentially an incentive for you to save. So we're saying that if you put aside £100 a month, then we're going to give you £5 if you manage to keep that aside for over the course of the next year. So the reason why we don't have to have an investment journey for that is because it's essentially an acquisition cost for us, where instead of just giving you £5 up front because you've referred a friend, we're helping you save and you're getting sort of almost some kind of cash back on that. And that's been really nice to see how many people have come to us for that and are excited about that. We will definitely look to add to that space to give you again more options for how you can get returns on your savings. The bonds are limited because we don't have infinite funding, and so we're looking. We're having conversations with potential partners at the moment to see how we can give you some return on the money you have in cash savings. Because again, one of the surprises for us has been that people do already now keep quite a bit of money with us in their cash savings. So obviously, we want to make sure they can get a return on that.
This is an edit your budget area. Enter an amount, and then we've got a monthly income and a regular sort of monthly expenses overview area, and then we can add an expense. So this is a way of building up a picture of your financial sort of life. And what we can do is pull through information about Pod, Tesco in this case as well, and then make a sort of informed decision about your sort of spending based on that. So here is the process of adding a few extra retailers in. You can see those have populated, and then we'll set our limit, and from there you can see a nice little save button. Love this little sort of like tick graphic, looks like Flintstone. And then a sort of like a nice bit of quick maths.
The whole point of the budgeter again is to not just show you what you've spent yesterday, but to tell you what you can spend today. You'd be surprised how many people save hundreds of pounds every month, but still have never done the math of, if I take out my rent and my big bills that I have every month, then I've got my discretionary spend left, and if I divide that by 31 days, how much can I actually spend every day? Yeah. And so that's why what we went live with initially and what is getting redesigned in a couple of weeks is something that looks like a math equation, because it is important for us to get people to start sort of thinking about that. Okay. So that, and then that recalculates every day. So if you put in your budget and you overspend on a Tuesday, then your daily allowance goes down for the rest of the week. Yes. We came to the unit of the week because for most people a month is too long, like myself included. If I go for a really big dinner on the 2nd of the month, I don't really know what that means for the last week. And so, we thought if we bring it down to the week and we just tell you, just don't overspend within 1 week, and that's tied to the Savers Awards, which I can talk about separately afterwards, then that should be sort of a realistic time frame to keep you in control of your money. The way you can then set up the budget is entirely up to you. So adding retailers is one option, but you can also have it a little bit more automated and just add categories. So you can say have a travel category and a transport category and a eating out category. The point there is that most people are looking to automate this entirely. What we find that automation is great if it's 100%. If it's not 100%, people aren't going to use it. And so I only go to Tesco to buy lunch, but maybe you only go to Tesco to buy garden supplies or something else. And so we found that, again, in working with our community, that when we give people the option, we just see an exponential increase in people using the system, because budgeting is something that everyone does completely differently. We've seen so many different spreadsheets constructed in so many different ways. And so that's sort of what we've tried to recreate in this budgeter, where you have the option to decide yourself how many categories you want to add. We see some people who end up going into extreme detail and having a coffee category where they add every single coffee shop they go to, and then and then we have others that just take out their big bills and sort of do it with that. And the design again initially was I guess closer to the spreadsheet than what you see with a traditional fintech, which is a lot more colors and graphs. That's about to again be redesigned and goes live in the next couple of weeks, where we've tried to sort of make that a little bit more usual looking, so that you're still getting that I guess the input of information to make better decisions, but it also looks more like your average app would look like.
Okay. You've mentioned a few times their redesigns, so that seems to be a big thing for you guys in the present. What's the process looking like for you guys, the redesign process? What kind of research, how do you validate your designs? Who's doing the designs? Are they from the Flintstones? Is there anything, anything specific to the way that you guys are designing things?
Sure. So the Flintstones is Matt, who's our resident illustrator. So he does all of our ads, but also all the illustrations in the app. So that sort of creates our unique language, and that's managed by Hia, who's our VP of Design, who has years and years of experience in design across both banking, but also consumer companies like ASOS and Co. Who thinks through these flows. The journey of how we do that is, as always, we start with the community. So we'll actually do a Google Hangout with a bunch of people who've proactively come back to us with feedback, and see how they've been using it. And I think we're starting with this one because this is probably one of those features that has most product thinking that has gone into it before going live, but also one of those that you can't really just know until you see people using it live. So it's an iterative approach with the community, the design feeding into it, but then also obviously the product thinking from within the team.
Okay, cool. So I guess not too far away for you guys to be launching the next version of design for that. Do you have a set date for that?
Probably within a couple of weeks. touch wood. Yeah, we're super excited.
Another thing we should notice was you've got a great big list of retailers on there.
Yeah.
How did you get that into the platform? Was there anything particularly you did? Did you rely on any third parties for that kind of thing?
Sure. So what we start with when you first land on the app is obviously it's nice to already have some retailers there. If you've been on the app for a while, it's just a list of retailers that you've specifically used. If you're new to the app, then it's the top 100 retailers that we see in the UK, that we're constantly tweaking with seeing what our users use specifically. The logos and the names come through a partnership with a company called Snowdrop. They offer a merchant reconciliation system where they integrate with Google to get that data from. Which means that also when you go into your transaction, this is fairly standard I think at this point with all of our competitors as well. You can see a map of where you spent and you can see a logo, which means you feel more in control of how and when you spend.
Yeah. Is there any sort of kind of defining language and logic to the design? Was there anything that you guys had in mind in terms of designing the color scheme or whatever?
The way the design works is with obviously Reach, our founder, who's very involved in the product, but also the broader team. So when we did the first iteration of the app, every design session would usually have someone else from the team who's never worked in product or design or anything like that. Who will come and go, yeah, that makes sense to me, or that doesn't make sense to me. And then we try and work with someone who's specifically put their hands up and said, I've been in overdrafts a lot, or I'm annoyed with my investment manager and I want to get stuff done digitally. And I think that's worked out really well as a process to sort of start with our own team and then the community as an extension of that.
Awesome. This is an overview of why the user should invest, and then they go through this sort of slider to give an indication of their risk appetite. From there, a series of bonds will populate, and we can then sort of see that lovely design language we saw before popping up and into a series of different subcategories. These are a little bit more interesting than what we're used to seeing, and then some documentation as well. So in terms of the rundown of the investment products, you're not saying here this is Warren Buffett's select list of Berkshire Hathaway assets. This is actually going to help the planet or something like that.
Yeah.
Is that core to the way that you were designing the approach? Is that something that's important to you guys?
Yeah, of course. So there's the first core decision that we made is that we don't offer trading, we offer investment. Most people don't invest. The people who do invest, most people should go into a lower risk fund where risk is hedged, and shouldn't go into things like crypto trading right away. So that was a big decision. And then we know from Eritrea's background, who has loads of experience with product in wealth, that people are more likely to stay in if they're investing in something they care about, and if they're investing towards a goal. So if we're just giving you portfolio A because your risk level is 4, if the value goes down at some point, which it will because that's how the market works, then you're much more likely to drop out than if you're investing in a greener planet, which you believe in. And then again, there's that point of bringing it closer to life.
How did you kind of find that those investment products resonated? Did you do anything particular to validate those products?
So, again, the investment products aren't live yet, but obviously, going back to the community, we made sure we validated those. We went through an extensive diligence process of making sure we put on the platform what we know is going to do well, because again, if the value of the investment goes down, then we're not charging our fees and we're not making any money. And so that there was a process of understanding sort of what kind of thematic portfolios work for people. It's not rocket science though. In general, it's sort of things that are better for the planet, or things that people care about. But then obviously before that, again, there was another step of what kind of investment products do we put on there. So and that's where we had the decision of having the bonds on the grow part of the app, not the invest part of the app, because there is no investment risk that you're taking on that. So that even if you're very risk averse, you can start sort of seeing the benefits of getting some returns on your savings. And then you have the separate invest tab where you are taking risk, and we want to make it very clear that you're taking risk. The risk profiler is Tinder inspired. It's a right swipe, left swipe, so it's a very simple journey, but it is a journey that tells you, multiple times the value of your investment can go down, and we want you to be aware of that risk.
Okay. Any challenges so far? Anything with that particular feature? Anything
I think, again, just finding that balance of creating a journey that we're happy with as product people, that is beautiful and simple and nice to go through, but that is very clear on the risk that you're entering. So sort of not selling, but getting people to make decisions with the right amount of information.
And when can users start using that feature?
Right now, I'd say sometime in August.
Okay, cool. Well, I think that's all the time we've actually got for today. Thank you very much for tuning in. If you want to see more from 11FS Pulse, head over to pulse.11fs.com, where you can also request a demo. If you've got any questions about the product or want to suggest a journey for us to include on our show or on this platform, hit us up at pulse@11fs.com or find us on Twitter at 11FSPulse. Eleanor, where can people find out more about you and what you're doing at Dozens?
Join our community on wearedozens.com. Connect with us on LinkedIn and everywhere else. We come to our meetups. Come to our space in Harrow Road next month, and we're about to launch the event calendar, and there's going to be a lot on there about financial education and other fun bits as well. Please do reach out.
Very cool. So great. We'll see you next week. Bye for now.
Homescreen is a show about all things product and design, where we showcase some of the best examples of user experiences from the 11FS Pulse research platform, which includes over 2,500 user journeys from financial service products around the world.